Alrighty, Doc here this morning, and it really is really quiet, really quiet. No one seems to be even participating. So, um, to the point where even my feeds are not showing quotes. I'm seeing Dukascopy is showing quotes, which is good. It's great, actually. You can see there's the euro. There is no dollar index being traded whatsoever, and so you can see there the euro is just kind of hovering very slow and tightly in that area of the 106.83. I think Friday, the last quotes we saw on Friday of last year was 106.99, and there is nothing for today. Not no weekly. It's just all just it's down a little bit, I guess you could say, on the currency itself against the dollar. You can see here, though, the Hinky is still moving up. It'll probably start to roll over. We'll get some red just from the quote itself, in another hour or so, probably. And you can see we're at the top end of the range right there. It's kind of, end of the year, new year. And we're not seeing quotes. I'm not seeing quotes in stock indices. Let's take a look at stock indices. It's at this point, it seems like the currencies on Dukascopy are about the only things ticking away. Let's see if they show something over here, because I'm not seeing any quotes whatsoever anywhere. Let's see, where's it at? Let's go to the S&P 500 right there. And let's see. Changing. Okay. And see, there's not even a bid and offer lit up in here. Market closed. So, and I saw gold. I think gold is open, which is cool. We got, where's it at? Right there. Let's go to gold. Gold, where did I see gold? I saw gold. Right. I was looking at it to see what I should start off with, and there is gold, and that's quoting. See, they're not even quoting a market nat. So says market's closed. So the only thing we have really going is the currencies, which is kind of interesting. It's always interesting to see the currencies tick away. You can see it's here up on the screen here. This is it. A lot of these things are they're showing a Boon trading. There you go. Boon's trading. They're showing a Bitcoin trading. Looks like Bitcoin might be up for the day. That's what it looks like right there. See, it's at the very bottom. So let me see if I'm getting a quote in Bitcoin. That'd be interesting. So we're not getting much of anything. Let's go there. Bitcoin, right there. Just reflecting that. Let's see if I can try to push it, see if there's something internally I can get up. Notice I'm not on the right setting or something like that. Let's try that, like that. No, that's not going anywhere either. It's not ticking away. And let's see if I can go like that. See if I can get it up on the screen. There we go. There's the Bitcoin. They are showing that as an active market. You can see the Hinky here on daily looking firm. Wide market. You can see it's about $80 wide. It's a lot. 80 instead of $8 wide. And just overall, it's just it's the world has gotten to a point where they follow the general markets in general. In other words, they follow the rhythm of the holiday. Everybody's following it on some level or another. Whereas now I see quotes on the CAC 40 and the DAX. I think they're ticking actually. So are they trading them? They must. It's like probably the Zetra DAX, the electronic market. Let's see. Everybody says C closed. I'm looking at some quotes through another source, through my Bloomberg. And let's see. I don't see. Okay. Yeah. Okay. So they're giving a quote on the S&Ps down about 10 points. So, or I guess in this case, from what I'm seeing quote wise, it's like 6 points. So it's trading at 61.75, and it settled on Friday at 68 and change. So it's just a little pressure there. Same thing. It looks like the Dow Jones Industrial Average is doing the same thing. They're floating around with down 90 points for the day. I don't think there's that much of a market So in other words, I don't think anything is being quoted. I'm not sure where those quotes are coming from, but Bloomberg is reflecting some type of quotes, but Dukascopy doesn't have it, and my sources don't have it. So I'm not sure if that's a legitimate market or not. If anybody's out there and they're in one of those countries where the Kakaran trades or the Zetra DAX and things like that, just give us a text and on the chat line and let us know that they are actually giving a live electronic quotes. We'll hunt towards those. But right now it doesn't even look like that. So basically what we'll do is we'll look at, let's go over to the euro again, and we'll go down the line, and let's look at it. It's more on J4X of quotes. When we last peeked at it, it was 83 at 84 basically. Let's see where is that. Where is it at right now? Where are you? Oh, there you're up top higher. There we go. 85 at 86. So they're upticking it. It is upticking on some level. Moving up against the dollar. But I have a settlement of 99 on Friday. So it's really down a little bit. Let's see, what else can we say about the euro today? You can see, we see it on J4X. Where's that mouse at? Let's click on that mouse again. There we are. Dismiss. There we go. You can see the J4X, on the daily there. Let's see what the weekly looks like. How it finished off the year and the week itself. And there it is right there. There's the weekly. It's been strong for a couple months now, just like we have over here. It's been strong for 2 or 3 months now. It was at 4 weeks, 8 weeks, 10 weeks. So it's 2.5 months. It's been very firm. And here we get the end of the year, and it closes out. Decent, it's challenging the high of 2 weeks ago, which is nice, which is not anything to complain about. We keep on thinking that we're going to see a stronger pairs trade and a weaker dollar. You can see they're trying to go after the what is that? That's the spring, at the beginning of the summer, right in June. You can see they're going after that at the moment. Pushing into the trying to play in that area. All right, cable seems to be the same way. We're getting a quote through Dukascopy with cable. Cable, GBP right there. And let's see what it looks like over here. That's the weekly. You can see there's been pressure on this for the last couple of weeks. And I know we went into a weekly sell ourselves last week, I believe it was. Let's see. Right there. There's the weekly. You see pretty much unchanged, and it did close in the weekly sell itself. Right there, we'll put the pink in there. And a solid line. And we'll get rid of the little circly thing. Oop, nope, little circly thing again. Remove. There we go. So a little pressure there. At the same time, we've pushed into the daily buy on Friday. Let's see what the daily looks like. Right there. Doing the same thing. Pressure on Friday and up today too. Trying to lift up a little bit more. Now I have a quote of 120.69 from Friday, and they're showing us a 120.50, 52. So you're talking about down 17 points from Friday, 17 pips. But you can see also at the same time, down at the bottom, the fast and slow stochastic is lifting, trying to get strength going. And you can see the same thing on our daily right there, trying to get strength and going through the zero line. So both are trying to reflect some type of very short-term buying. And then we'll see how the markets open up tomorrow or tonight. Actually, it's going to be our electronic trading is supposed to open up this evening, just like a Sunday night. So we'll be seeing action coming into tomorrow morning. There we go. Now from there, let's see what the Swiss is up to. It seems like the dollar is firm everywhere, and I can see there's a. Let me just click on this. This is interesting. There's the the Bund, the German Bund. I'm not sure if it must be the Treasury. So, it's yielding that. Let's see what they did. They're not trading, obviously, the U.S. one. And that is what, the daily. And you can see let's say like our 10-year. Let's go to the 10-year. No, it's not there anyway. Let's say okay, and then go here, and there's the 10-year. But our shorter terms, like 3 months, 6 months, so forth, are in the 4s, whereas the longer term 10-year, 30-year is in the 3s in yield. So they've got this really odd contango going on. Where is that at? Right there it is, right there. And that was how they sent it out at the end of the year there, down. In other words, interest rates were rising, and probably that's why we see the currency pairs reflecting that. In the when we go back to the currency pairs themselves, they're all down a little bit against the dollar. Let's see what that Swiss looks like. Swiss right there. And you see the Swiss right there. There's the Swiss. In the same situation. All showing Friday settlements. Look like it's trying to bounce. And what are we seeing here today? Swiss is kind of just pressuring down. We settled at 92.64. We're trading at 92.42. So it's still gaining, which is kind of interesting. In other words, when the Swiss goes down, it's making money against the dollar. When it's going up, it's losing money against the dollar. Whereas right now with the euro is actually down from Friday. So it's losing against the dollar at the moment. So we have that. It's almost like, I wonder what the yen is probably doing the same thing. It seems like they're playing catch up in some ways. The yen and the Swiss were so, I guess you could say, distorted for 2 months that, they were moving in the opposite directions of the British pound and the euro, and they were losing money, and now they seem to be coming back. I mean, they've come down from 101. I mean, the Swiss was trading at 101 and change, and is now trading at 92. That's a good percentage drop. Basically about a 10% drop, which is pretty dramatic. Let's see. Let's put it up on. Let's see, that's the Swiss. Oh yeah, let's see what the yen looks like itself. Now, the yen may be going through the same situation right now, and that would be gaining against the dollar also, since these two seem to work in unison. You can see that going down there. Now let's see what the quote is over here. So on Friday, closed at 131.12, almost 13, and you can see we are trading at 130.75 offers. So that's a pretty good drop also. So what we have is the the British pound. Was the British pound moving back up? I think the euro is moving down, and so is the British pound. They both were. So we are seeing this breakaway again, where the yen and the Swiss are kind of getting back into where they belong, I guess you could say. In other words, if they're really being kept in some type of envelope or range, which we think they are, then what they're doing now is they're drifting back to that range. I imagine there'll be an interesting bounce on the yen around the 125 area, and then we'll see what it does from there. And let's see. Is anybody here besides me? Oh, I do. I see a few watchers. Good. Oh, there we go. I see Robin. I see Janos. Excellent. Did the notification of stream pop up or not? I think it did. Yeah, I think I saw it. I clicked it off. So I think it did say that. How was your New Year's? I will set a test for 12:50 GMT. Oh, cool. Right, exactly. Boring as I wanted. That's about the same thing here. And we had rain, but our temperatures, we were in the We are in the where are we at? We are like 18 Celsius. I mean, we're really warm. We've just gone through this super coldest period in history, and now we're in a warm period. I don't think it's breaking a record though. I think we've had warmer days, whereas the cold period just a week ago was breaking records. But yeah, so it was rainy. So it was warm and rainy. I didn't want to go out. U.S. markets, others seem closed today. They are. They are. Pretty much everything is now. I'm getting a Bloomberg quote on. Excuse me. I'm getting a Bloomberg quote. And it's kind of trying to reflect, the S&P's down about 10 points, but no one else is reflecting anything like that. And more than likely it's wrong. So, and they have the Dow Jones down 90 points. I'm not seeing changing quotes, so I'm not sure what that was. It was some type of odd settlement thing, but everything else is showing settlements of Friday still. And we're seeing it on Dukascopy when it comes to the stock indices. I can't tell it. I thought the CAC 40 and the Zetra is trading. I thought I saw that. And they're up on the day. So, see if you can spot it. Let's see. Matter of fact, it should be on. I should be able to get it on Dukascopy. Let's see. What is the Zetra DAX? Not there. What's the symbol for the DAX? I should go open up the old J4X, because the old J4X, we have that symbol. Let's see if I can find it. Move this over a little bit. I think that's it right there, and that'll open it up. And I'll be able to take a peek and see if they're quoting the CAC 40 or the DAX. There we go. And the DAX is, there's the Bund DAX. There it is, DEU. Let's see if we can get that on here. DEU. And that's not it. There it is, right there. Let's clear that. There we go. DEU. I think that's it right there, isn't it? I think that's it. Yeah, there's a quote with the DAX. So they're trading, and it seems, last I looked, it looked like they were plus. You can see it here on the Hinky. Let's turn the Hinky off and see what the bar looks like itself. There it is. So that's up. So that's today's trading. So the DAX is showing some strength here. A lot of strength. Pretty good strength, actually. And I thought I saw the CAC 40 on the Bloomberg I was looking at showed the CAC 40 also trading. So they must be trading on an electronic market. You can see it there. There's the DAX. Changing markets and bids and offers and so forth. Listened to music and went to sleep. Yeah, basically, I started binging Big Bang Theory. That was very, very entertaining. I hadn't seen it in years, So, it's always funny, Brunch of sparkling wine. There you go. You have been slowing down on liquid refreshments, adult beverages, haven't you? That's probably healthy for you. All right, so you can see there is a little stock trading. I'm not surprised if we find the stock indices lift up tomorrow. We'll see, but I kind of think that they want to lift up. We'll see how they're in weekly sells, daily sells. I have no room. I have no technical analysis telling me that they should do it. It's just that just has that feel to it. Where's the S&Ps right here? There they are. Yeah, there are 4 days in a sell. Oh, I know it. I think I saw that the Tech 100 actually closed in a daily buy. I think that's what I saw. Yeah, it closed in a daily buy on Friday. I was like, oh, that's interesting. And just because of that, I was thinking, are they going to start buying this stuff? So we'll see. Was that a jump forward? I don't know. Everything else, I mean, the Dow Jones Industrial Average is in the minus. Let's see, where's it at? There it is right there. It's 2 days in a sell. It's in a weekly sell for 3 weeks. So, the Tech 100 making its move into the daily buy, I thought that's rare. They've been beating the daylights out of it. So, I don't know. Somehow or another, I think that it could be a good sign of some strength to come. You got to figure. I mean, I think we talked about it I know I talked about it last week. It was the put-call ratio. It was at a historic number where there were more puts being bought to calls than ever before. And that day when it came out, the stock market lifted like 400 points. 500 points. The Dow did that, or something. It was that Thursday rally, and so, I really let me just show it to you on the screen here. I really have, there it is right there. So that came out. Let's see if we can scrunch this down. And right there. And when is that it right there? No. So it's got to be. Yeah, so it was like, that's it right there. They put in that low right there of 05 or something like that. Just under 3,805. And let's see, let's get the mouse going there. And that was the day they announced that. And then the next day, this was at the close. So this was the next day right there. It played with it a little bit. And then you can see the shot. I mean, it moved it up to 3,900. It moved up 100 points in the S&Ps in the one day. I think it got up to 90 something in the end. And that to me, I thought was money probably felt comfortable enough to step up and buy. The fund managers could step up and buy when they see something like that. That's got to be written into a lot of the manifest or incorporation manifestos. When the put call ratio becomes over extreme in one direction, they buy or they do something or sell. They adjust to it. And so you can see there it played. That's at 1 day. That's hours. That was a heck of a move. And it got up into the 80s, and I think it touched 92 or something like that. Or was it 82? I think it was 82. And played with that. And so, and then on Friday, now I guess it's better than 82, so it must have gone to 92. And then what happened was on Friday with the holiday, they fell down, but they didn't really, they knocked them down into the 20s, I think it was. And we'll see here in a second. But with that put-call ratio screeching through the highs there, that definitely made it interesting. Yeah, that's it. That was it. It was the 80s. So it got up to 82. And then they knocked it all the way down on Friday. And by the end of the day, they brought it back to almost unchanged. So that we refer to that as trading heavy. You know. Ooh, Solomon, Happy New Year to you too. You know, and so we usually call that trading heavy, the way it traded down like this. The thing is that from there on Friday, the thing really showed some life. You know, I could see it. I was even long for it. And you could see that it kept on pushing and pushing to try to climb up, and they refused to go after the low, you know, the 805, when they were only like 20 some odd points away. And they started slowly, you know, you can see here, this is the before lunch, and you can see in the United States that is, and you can see that they were just slowly working it on the upside, making higher lows. And I kept on thinking, okay, they're going to do it, and then they, you know, smashed it there. And I thought, okay, now they're going to go after the oh 05, and they didn't. They turned around, and this was really fast too. I mean, this was really fast. This is like, you know, in a 10-minute period, they took it down like that, and then they just climbed the rest of the day on the upside, and you know, basically settled at the close of the day at I think 2 points away from the settlement of the day before. I think we settled at 71 or 69, and it something like, depending on which settlement you watch. And what it did is it closed at 68 and change on Friday. So I thought that said to me that it wasn't trading heavy anymore, you know, because they did this selling and they couldn't, you know, they couldn't make a new low here. And we had this triangle. I was looking at the triangle at the time too. That's what made me get long. Is it broke the triangle? I figured, oh, you know, we'll get up into the 40s from this, from the 20s. And it kept on climbing and kept on showing life in it. And that's how we basically ended like that. And there's the New York close right here. And then the finishing off right here, they added about another 8 points. So it should be a good year. I think it's going to be a very interesting year. I think that I don't think there's any real clarity. You know, in other words, I don't think there's a very clear picture of what the markets want to do. I mean, everybody on the talking heads on the televisions, you know, the financial channels, all they're talking about is how it's going to be a bad first quarter or second quarter or something like that. They keep on saying that over and over again. But I'm not totally convinced of it. I kind of think we're going to see, you know, usually what the first week is kind of interesting. You know, you get this, you know, characteristic of the year out of it sometimes. I kind of think that if we top out, I kind of think it would be in February. You know, I'm not sure. I think there's a lot of capital that needs to be invested. So we'll see. We'll see how they play it out over the next couple of days. Our math will keep us honest, and in math right now, there's only one thing out of the three major U.S. indices, and that is the Tech 100, which is the most beat up of the indices, is closed in a daily buy. That's it. Everybody else is in daily sell and weekly sell. They're all, even the Tech 100, still in a weekly sell. But it closed in a daily buy, and that just kind of puts a little voice in the back of my head saying, let's see what they're really going to do. Are they going to step up and start buying a little bit and squeeze the shorts? I mean, we've seen so many stocks. I mean, like, oh, here's something also. The Tesla closed in a daily buy also. Let's see if we can get that on the screen. Tesla closed in a daily buy. And Robin and I have been watching to see if we can. The thing's been in a weekly sell for, I don't know, 15 weeks or 16 weeks or 17 weeks, something like that. And that closed in a daily buy after 17 days in a daily sell or something like that. I forget, 15 days, 13 days, something like that. Where's that? That is Southwest Airlines. Look at Southwest Airlines closing a daily buy too. But it's also like the rest of them in weekly sells. But let me just show you Tesla. Tesla tried to get in there on Thursday, but Friday it closed on it. Now, it's been in a weekly sell for months. Since August 23rd. And the was that 260 area, 250 area, something 300 area. All right. What is that? Right there. That's closed at 380. Basically $301. And we've been in a weekly sell since then. And it's lost, it's traded down to almost 100 3 days ago. It went down to 108.24. Day before that was 108.10. So 108.10, then 108.24, and then it started lifting. So when I saw that, and I saw Tech 100 lift into a daily buy, I'm thinking, are they covering some of their shorts? Could they be? Could money start committing itself? That's how I always look at it. Money committing itself. They become committed to buying something, and I think they're doing it. I think that they're starting to nibble. So we'll see over the next couple of days. I mean, sellers have been trying, and you can see how I just showed you the S&P tried, and it failed at it. It kept on lifting again. What was the main reason for such a sharp drop in Tesla? Yeah, there's a couple stories. The media says it's because of Elon Musk buying what's it called, Twitter, and that he has sold I don't know, $6, $7, $8 billion worth of stock to get cash for his Twitter investment. He has he has stock committed, but he has some junior investors. Other billionaires have bought into the Twitter investment. But that's been the main theme. They say that he's not concentrating on the stock. But Google. I think let's see. Do we have Google in here? Google's beat up just as bad. Let me find you Google. I mean, a lot of and Meta's beat up the same way. I mean, we see a lot of weakness in that whole sector. So down 75%, down 60%. It's not much of a difference really when you think about it. I mean, yeah, of course, if you're not protected, if you're invested in these things and you're not selling calls and buying puts and putting collars on and things like that, then yeah, it's very painful. But if you're treating it correctly, then I just shake my shoulders at it. I don't take it too serious. I don't understand how money managers can not sell calls against their stocks and not buy puts at times when there's weakness. And I don't understand how they don't do that. But they don't. They seem to be foolishly naked long sometimes, thinking God knows what. I think they all think they're Warren Buffett. And Warren Buffett underperforms the market most of the time. So I don't understand that whole logic. But that's the way stupid money is. And there's tons of stupid money invested into the hedge fund universe. So where did I want to go? I wanted to take a look at some of the other tech companies. I think that we talked about this about a week ago, where we're seeing odd little twisting bounces out of it all. So let's see. Here is let's see, that's Netflix. There is Google, and you can see Google been in a daily buy for, I guess, 5 days. But we're also in the 3-week situation of weekly sell. And, we're talking, what was the lows here? It was like 83 and change. And it came down, when we looked at this a couple of weeks ago, just trying to get a flavor of the whole movement itself, going back a year. You can see there's February now it's last year, where the stock is trading at 160. So it lost 50% of its value. Now, no doubt, what's it called? Tesla lost more than that, lost like 78% of its value or something like that, 76%. But, I mean, to me, that's pretty damaging just as much as far as I'm concerned. And that was Google. And then I think Meta. There's Meta. Meta's been in a weekly buy for 5 weeks. It hasn't gone anywhere from it, but after making that low of like 90 something, and I think, let's see, what's the high there? The high is like back in February was it was a $250 stock. I think that's what it was, $250, $350 stock, and so that has lost just as bad or worse, I guess you could say, and then Tesla. So that whole sector is just been beat. So when I see a daily buy, I mean, obviously it's the end of the year, so you can't get too nuts over the whole thing. But when you see a daily buy with something like that, it just makes me think that maybe they're going to bottom fish in here. You can see it's doing it here. It's not. Let's fix this too. Fix the algorithm, make it thicker. There we are. I was impressed that they got into the weekly buy here. So they've been bottom fishing for over a month now. There's a lot of money, obviously, bottom fishing in here. Where it's been sideways down, just sitting there, and that's what this thing's been doing. And now, it's had a nice little bounce off of those low 80s. So, I mean, if there's a short squeeze over there, that will put a lot of energy into all the stock indices. Obviously, they have plenty of room to lift. I think the Dow closed out the year down a little more than 8%, which is not that bad. The S&P 500 closed out a little bit more than 18%. I think it might have been even 19%, right around there, 18, 19%. And then the Tech 100 or the NQ's NASDAQ closed down almost 34% for the year. So there's so much, money always thinks in that fashion. The investment community and the hedge fund slash mutual fund, retirement fund, those managers think in that fashion. In other words, they have the old saying about buying when blood is on the street. Well, obviously there's been blood on the street in this sector. And you can see they've put in some lows, and they're all trying to do some type of bottoming. I mean, really, when you really think about it, can you really say that you feel comfortable not being long those things if you're paid to be invested in them? You got to be figuring that you're definitely dollar cost averaging here at the end of the year. And that's what they've been doing, is they've been dollar cost averaging the last 2 months into some of these products. So, the rationale with Tesla is, okay, Elon's doing other things and selling stock at the same time. Is he going to be, is he going to get beat up more stock-wise? I kind of doubt it. I would think that there's a lot of money managers that have said things like, I'm going to buy all day long in the 80s and 90s. They may not give them a chance to get into the 80s and 90s. We've seen it get down to 108, and now it's trading at like 125. They may not give them that chance, and money managers get very antsy when they think that they can buy into something, and then weeks and months go by and they can't get into it. They start to do a dollar cost averaging at a higher rate. Higher price itself. So I hope I answered that question. It's kind of a confusing one myself, because I'm not a big fan of the electric car. As far as I'm concerned, the electric car is it's okay. We've been playing around with electric types of vehicles since the 60s. And here in the States, I mean, we in the 1920s and 30s they had electric trucks and cars. The batteries were enormous. Even the German army during World War II had electric tanks. So I mean, they had diesel engines charging their batteries, but the tanks their motor was an electric motor. So I mean, it's not that mystical when you hear these people talking about electric cars. It's like, yeah, they've been doing this a long time. The technology is obviously at the best now. We're seeing the best of the best. And when you're in a Tesla, they're a comfortable car. And they're an odd situation because, you get into it and it's running, but you don't hear anything. And especially in the summertime when you get into a Tesla, the air conditioning's running, it's happy. You get in there, it's like, oh, it's on already. It's been turned on and it's silent at the same time. So, and that's where we are with that. And that's what makes me think, are they going to try to buy these things on Monday, or in this case Tuesday and Wednesday, and then we'll see how they finish the week out. That's where my head's at. All right, let's see. I guess we can keep on looking at currencies, and also, what's the DAX? Do we have the DAX up there still? Yeah, the DAX is up there, And it looks like it's still moving, in the positive direction. Yeah, you can see that right there. It's still holding up high for the day. And that's, it's where it settled on Friday right there, the down bar. And then, you can see today, the strength in it today, right there. All right. What else we got to go look at? Anybody want to look at something that, we could try to take apart, since most things are not trading, but we could see how the year ended in them and see if there's a little spark of something that gives us a feel like the NQs with me. Just seeing the NQs themselves being in a daily buy. We'll wait and give everybody a chance to be able to ask a question. I see more people coming in too. Where else? Oh, let's take a look at the crypto. They're not quoting it at Dukascopy. Yeah, they are quoting it in Dukascopy. Let's see if we can find the crypto. I find the crypto to be like a manifestation, or it's like analogous to stock indices. If it's strong, they're really buying in the end result. There it is right there. There's Bitcoin. So Bitcoin is up today too. You see that? They're stepping up for it. They're buying it. I mean, nothing major, but they're buying it. There's more buyers than sellers, that's for sure. Where's that? That is Friday, right? Right there. And then there's today. Right there, and you can see the quotes. And here's one we should take a look at before we drift to Bitcoin, but I'm going to look at Bitcoin real quick here. But the Russell 2000, which is kind of like the sloppiest of the stock indices here in the States, the fourth stock index that people kind of lean into when they think speculators are coming back into the market. They reach for the Russell 2000. So let me just show you. There is the Friday's Bitcoin, and you can see on Dukascopy there's a 700 offer now. So, and here we see the settlement of 500. So there's definitely some buying coming in, and it closed in a daily buy on Friday also right there. Let's put that in there. And it's in a weekly buy. That's the other thing. I remember saying to myself when I saw that it was in a weekly buy, I thought to myself, self? Hello, self. I was thinking, wow, weekly buy, daily buy. Is money trying to find a way to get long again? That's what I'm thinking. Do you expect third international war? Oh, no, not at all. And what would happen for the dollar if that happened? I guess flight to safety, right? Every time there's a chaotic thing like that, they go to the dollar because there's no other liquid product that, I guess, in other words, we've talked about this. When we look at gold and silver, we keep on thinking that, I'm convinced that gold should be at least $8,000 an ounce. That's where I think the real fair value of it is right now. But the central banks are not going to allow it to even get remotely close to there because of the incorporations. When you incorporate a fund, you have to put your manifesto together. In other words, you got to say what you're going to do with the money. It's not like FTX where he says, I'm going to be an exchange. I just hold your cryptos in a wallet and then turn around and go move it around. That's fraud, Gold and real estate. Yeah, they're both very solid. I'm hearing that they're not really selling real estate. They're just not buying it right now. So the buyers have dried up, but the sellers have not come in. They're not selling real estate. And at the same time, the metals complex, we've seen gold firm, solid, but not where it should be, especially when you look at the Bitcoin. If Bitcoin can be cruising along at 16,500, and today it's at 16,700 basically, and you can see how it's locked itself in this $16,000 area now for a couple months, ever since the collapse of FTX right here. So I kind of think that, no, I don't think we're going to see a global war. I think, if anything, Russia has wrecked its brand name. That's what it really has done. I mean, they coasted on the idea that they were a superpower or of some form over the last, over like most of last century and this century start. But economically, they're just a small cog in the wheel of the economic system. So, I think they've shown that they're just, just a nuclear power, and that's it. Nothing more than that. And I think that I don't think that they feel comfortable even with their nuclear weapons. Because if they felt comfortable with their nuclear weapons, they'd be much more threatening right now. But they keep on firing drones and artillery and things like that, and they talk about how they could go nuclear. They make that insultive suggestion, like as if they're going to fire them. But I'm not. I would assume that their nuclear capability is equal to their conventional capability. So that must make them go to bed at night not sure if when they fire one of their nuclear weapons it will actually work, or if it's even there. In other words, is it totally functional? Will it not have fuel in it? Will it not go where it's supposed to go? Will it actually explode on home soil? I think that's the way I look at it. So I don't really see an international war. I see lots of international posturing. The word posturing meaning that everybody acts like there's going to be one. But I'm not really seeing that. And to be honest, even when the Democrats here laugh it off, it says something. In other words, they're not concerned. Matter of fact, Biden's State Department and the Pentagon keep on, every time like Putin says something, they come back and they say something back like, no, we don't have any confidence that this is going to happen or that's going to happen. And so they're moving patriots into Ukraine, and no one's really doing anything, doing anything about it. In other words, they're firing some rockets here and there, and they try to, and then you're seeing the probing by the Ukraine side where they're firing further and further into Belarus and into Russia, and I'm not seeing any response more than a simple conventional one. I just don't think they have the power to respond. I think that's what it comes down to. So I can't imagine an international battle because I don't think they'll last long. That's what it really comes down to. I don't think they have the capacity to deal with it. The population would probably be really angry at it anyway. I think there's a lot of burnout from the last century. I think it's been systemic. It's been everywhere. From Russia to Germany to the old Eastern Bloc. There's a burnout of militarism. I think they don't really have a hunger for it anymore. I don't think it's there. They want it. They want to do it. It seems like, but I don't think they really have the hunger. If they did, we would see it. I don't see it as much as I see everything that's going on as it is. So I hope that answers it. But yeah, let's take a look at the gold. And gold, you can see here, settled out at just the 1830 area. That's Friday. And then let's see what, I don't even think Dukascopy is even quoting gold. I looked at it earlier before the webinar started, and there was no quote in gold. So yeah, it's got a red thing in front of it. So it's not even quoted. That market's even closed. Like I said, I look at cryptos and Bitcoin in particular, and when I see a $16,000 Bitcoin, I have to believe that gold has to be at least $4,000 to $8,000, at least in that area. And I've been saying that for years, but there's no way, because of the incorporation of all the funds and the hedge funds and the retirement funds, that a gold trading at $4,000 would produce a massive equity sale. That's written into a lot of their manifestos. So that's why the central banks keep, I guess what you call it, paper gold down. In other words, when you look at the futures contract, you see gold trading at a very low price, whereas you would think in a world of calamity where there's threat of nuclear war, there's a threat of instability overall, there's a threat of inflation, you would think that we would be seeing not under $2,000 gold. You would think you'd be looking at under $8,000 gold. With all those things occurring, and that's half the reason why I don't believe that there's an international war coming, is because if there was, they would be liquidating equities and they would be buying, things like gold and silver, and we're not seeing that. We're seeing nibbling. We see slow, soft investing, but we see strength. It's not trading heavy, but it's not trading light either. So it says to me that money has no conviction towards it because they have a better idea that there's nowhere else to go to begin with. In other words, there's just no other place to invest. So the dollar would stay the dollar, and in other words, it would stay firm the way it is now. We would, over here in the States, we'd be happy to see it down in the 96s, 94s, 92s, something like that. This 115 on the dollar index was just ridiculous, in price wise. It was just I guess panic buying of some form or another because of inflation and the yield of the bonds and Ukraine and the oil market. It had all those things pushing on it, but it shouldn't be that high. It has to, it should be much lower, and we're seeing it now. You see it in the pairs. They're slowly coming in and firming them up. And like I said, I'm a little surprised in some ways that the Swiss and the yen are outperforming the pound and the euro. In a strong way, they're outperforming them right now. But it's not that big a surprise because of the way we've been following them. And we really believe that the central banks have a policy of keeping them in a range. And we've talked about this for years here now. And we've been pretty right about it. They've been staying in some type of range. Do you expect further upward move in interest rates? Not really. Because of the amount of debt outstanding. And the world has bankrupt itself to a great extent at this point. So in other words, here you had Switzerland getting swaps by the Federal Reserve to help out or to straighten out the Credit Suisse bank problem. So there's nowhere to go. That's the problem. It's I think we have a saying over here that kind of defines it clearly. When you're talking about the laundry, in other words, clothing that you wear, and they say that what's happened is that America is the cleanest of the dirty shirts. So in other words, everybody is is dirty. Everybody is soiled, or bankrupt. But America is also overextended, but it's not as bad as everybody else. Now that's really hard to look at sometimes because we're in the trillions and other people are like in the billions or like 2 trillion or 1 trillion. Here we fly along with a budget of like 31 trillion or something like that. It's like it's very tenacious. The number is incredibly powerful. Just incredibly powerful. So I don't really expect to see interest rates move because they've already got them fixed. The bond vigilantes, what we call the bond vigilantes, because it's a over-the-counter market, really, the bond market, except for the futures contract, the trade or the treasury market itself with the what do they call them, the designated brokers. Pretty much there is no real exchange traded bonds. They're over the counter. And so, once they're issued, then there's a secondary market, and that's an over the counter market. And that's why they call them bond vigilantes, is because, when they remove their bid, they all remove their bid instantly. So there's no specialist, there's no, support going on, nothing. It's just one moment it's this price, and the next moment it's that price. And so I don't really expect to see interest rates go anywhere. Maybe they pick up another 0.5 percentage point. The bond market is reflecting a 4.7, 4.8. The Federal Reserve is talking a 5.1, 5.12, an eighth, 5 and an eighth basically. the markets in the 10-year and the 30-year here in the States are reflecting in the threes now. So it's not. Let's see if we can put that up on the screen. Let's put that up on the screen. Let's see, where's it at? Right there. So you can see. Let's see, where's that? Do I have that there? Yeah. So let's look at. There's the 30-year right there. You can see we're, heading for the lows of the last month, but I mean we were much lower before when the panic was going on. Right there, you can see, it was all the way down into the 116 area, something like that. Now let's see if we can put. We're going to put bonds up on the screen of all the countries, internationally, and just get a flavor of how the contango or the backwardsness. In other words, back months are cheaper than, or more valuable. I'm sorry, they're more valuable than front months. So it means that basically money is interpreting it. The bond vigilantes are interpreting it as prices are going to stop, interest rates are going to stop going up, and they're going to start to turn and head down. That's what it's trying to tell us. Let's see, where's it at? I am actually getting now I'm seeing a quote in the S&P's down 375. And then the Bloomberg was reflecting down 10. Let's see what the Bloomberg is saying. Maybe they're starting to do some electronic trading here. So let's go find the interest rates. Bonds. Not there. Not there. Markets. There we go. Bonds. And we'll move this onto the screen. So you can see here, it's reflecting. There's the 1 month. It's yielding 4%, right? Then you go and look at the 10-year, and it's yielding 3.879. Well, where's a candidate for buy the product in here you go, the 20-year. The 20, for whatever reason, the 20-year is yielding 4.14. It must be illiquidity more than anything else. Because look at the 30-year, it's yielding 3.97. But the front months, the 1 month, 3 month, 4 months, 6, 1 year, 1 year's yielding 4.72. So the bond traders are not really reflecting anything too bad. Like, look at the 2-year trading at 4.4, the 3-year at 4.2. The kind of like there's the 7-year to 10-year are notes, so they're treated a little differently. But you can see the 7-year is yielding 3.96, basically the same as the 30-year. And so 5 years out, they're looking at 4%. So I think if they had lost control of it, they'd be trading at like 11-12% right now, and they don't seem to have lost any control of it. So, and you can see the same thing. Like there's the gilts, in Britain. You see the 2-year yielding 3.7, and you can see the 30-year yielding 3.9. At least it's a little bit smoother. So I mean, it makes a little bit more sense. 3.7. It's a little bit more orderly. The German, you can see the 30-year is yielding 2.3, and the 20-year is yielding 2.4, and the 10-year is yielding 2.4. So I think the bond vigilantes would be doing something and giving us a warning that there's problems. So I don't expect to see any real push on the upside. Just out to the 5 at most, 4.7 to 5. And it'll all come down to stats and statistics and and everything else. In other words, what the fund managers can invest in or what they can't invest in. All right, traders. I guess this is about it. It's 8:29. I guess we can talk about, what should we title this thing? Yearly look or something like that. Or Giannis, you think there's any particular thing, any type of title we should put on this thing, or what? It felt like we were really looking at the overall action of last year, trying to understand what this year is going to bring us. So the title should be something like, let's see, what should we call this? I'm trying to figure out what to call it. I'm going into it now. I'm transmitting it over to you. Let's see, what should we call it? Title. Once I write title, all of a sudden my brain starts to work. Title. There we go. And I guess the title will be end of the year look. As the hedge fund observing each trade, let's see. As the hedge fund observing each trade closely, is there any way to hide our trades? Well, you got black pools and so forth. You can do private transactions through some of the your brokers, your clearinghouses. But is there year in review? There you go. I like that, Robin. Year in review. So, I mean, the funds use those black pools. They use them for the futures. They use them for, the equity futures. They use them for some of the commodities. There's, what do they call it? There's ECMs, exchange something markets. Must be exchange. I forget what the C stands for. But I think it's, and M is market. So there's like 47 different exchanges now. And so they can park things on those exchanges, transact them, and then put them into the national system, not at like the old under the rules. The rules say they're supposed to disseminate any public company has to be disseminated instantly. Okay? But the Securities Exchange Commission has dropped that ever since quantitative easing. And so now they're hiding plenty of trades through different ECMs and different black pools and so forth in the clearinghouse, and they put them into the system most of the time over a 2 or 3 day period. So you get a lag of volume. So you could look if you're interested. Let's see. So Solomon says, as the hedge fund observing each trade closely, is there any way to hide our trades? They're hiding them all day long. It's the other way around. It's they have to put them into the system sooner or later because they get cleared. And when they get cleared, the Securities Exchange Commission says, okay, now we should see them. So they go back and they put the open interest into the system and the volume a couple of days later. The idea when they hide them, let's talk about before I leave. Let's just talk about that really quick. The objective of hiding, a fund hides transactions so that other funds don't step on their market. Okay, I'm going to say that out loud again. Step on their market. In other words, you want to buy a company, but you don't want anybody else to know you want to buy that company. So they go into a black pool or they go to their broker and they try to accumulate stock in that company and not push the stock value up faster than they need to. They try to nibble on it. So that's why they hide their transactions. Or they want to get out of a company. They've reached their objective, or they don't like how the company's acting anymore, and they want to get out of it without the rest of the industry knowing that they're liquidating their position. That's what the hiding of it is all about, really. Does that make sense to you? They don't want to get stepped on. It's like moving a cow. They don't want to get, they want to milk the cow, but they don't want to get stepped on by the cow since it's 1,800 pounds or, 700 kilos, that type of thing in weight. They don't want to get their toes stepped on. Yeah. That's what it really comes down to. They're just trying to get in or get out of a position without getting anybody else interfering in that. So in other words, imagine you're buying a stock that's trading at 90 and you go, okay, it looks great. I think I want to build a position in that. So they go to the let's see how further we might go with the sucking market. Yeah, really. We're going to see how this market acts over the next couple of days. So, all right, we're going to get out of here. We'll catch you all tomorrow where the markets will be trading live and we'll be able to see what the money is thinking about it through their price action. And that's pretty much what we do. Our algorithms read the price action and give us usually a good heads up on which direction they're taking. So, all right, this is Doc from North America, wishing everybody a really good economic year. We'll see how it plays out. And happy trails to you. Happy trails to you. To all our trading friends, happy trails to you. Oh, geez, I forgot how to sing that song. I think that's a trading friends at the end there. Happy trails to you. To all our... I have to watch Rawhide again. I've lost the song in my head. Anyhow, this is Doc saying arrivederci.